66% of Americans who file for bankruptcy do so because of medical bills. Not reckless spending, not bad decisions. Medical bills. And most of them had health insurance when it happened. Insurance is one of the most important financial tools you will ever use, and also one of the least understood. The policies are written by lawyers. The fine print is designed to confuse. And nobody, not your school, not your employer, not your bank, ever teaches you how it actually works. Today that changes. We are going deep on life insurance, health insurance, and auto insurance. The real math, the hidden traps, and the decisions that could protect your family from financial ruin. Let's start with the most important concept in all of insurance: expected value. It's a simple idea from probability theory. You take the probability of something bad happening and multiply it by the cost if it does. The result is your expected loss. Insurance exists to protect you from that loss. Here are real numbers. The probability of your house burning down in any given year is roughly 0.1%. But if your home is worth $300,000, your expected loss from that risk is $300 per year. That is almost exactly what homeowners insurance costs. Insurance is not a bet against yourself. It is a transfer of risk from you, who cannot absorb a catastrophic loss, to a company that spreads that risk across millions of policyholders. Even when nothing bad happens, you are not wasting money. You are buying protection at a mathematically fair price. Now let's debunk the biggest myth in life insurance. Most people think life insurance is about covering your death. It isn't. Life insurance is about replacing your income so the people who depend on you can survive financially when you are gone. There are two main types: term and permanent. Term insurance is simple. You pay a monthly premium, and if you die within the term, usually 10, 20, or 30 years, your beneficiaries receive a tax-free lump sum. If you don't die, the policy expires. No cash value, no investment component, just pure protection. Permanent life insurance, whole life, universal life, variable life, bundles an investment account with your coverage. The fees are high, the returns are often low, and most independent financial advisors say the same thing: buy term and invest the difference. So how much do you need? The standard rule of thumb is 10 to 12 times your annual income. If you earn $80,000 a year, you need $800,000 to $1 million in coverage. A healthy 30-year-old can get a 20-year $500,000 term policy for around $30 to $40 per month. That is $1 a day to ensure your family's financial survival. Now let's talk about auto insurance and the trap that millions of drivers walk into every day. Most states require liability insurance, and most drivers buy exactly the state minimum. In Texas, the minimum is $30,000 per person, $60,000 per accident. That sounds reasonable until you see what modern accidents actually cost. The average new vehicle now costs over $48,000. If you cause an accident and total someone's car, plus they have significant medical expenses, damages can easily exceed your policy limits. Once you exceed those limits, you are personally liable. Your wages can be garnished. Your savings can be seized. Minimum coverage felt like protection, but it left you exposed. Professionals recommend at least a $100,000, $300,000 policy. $100,000 in bodily injury per person, $300,000 per accident, plus strong property damage coverage. The price difference between minimum and adequate coverage is often less than $50 per month. there is one more coverage gap that trips up careful drivers: uninsured and underinsured motorist protection. 1 in 8 American drivers carries no auto insurance at all. If one of them puts you in the hospital, your coverage may be your only protection. Adding it to your policy typically costs less than $50 per year. It is one of the best values in all of personal finance. Health insurance is where complexity peaks and where the underinsurance crisis hits hardest. Let's break down the key terms. Your premium is the monthly cost of your plan. Your deductible is how much you pay before insurance kicks in. Your copay is a flat fee for specific services, and your out-of-pocket maximum is the absolute most you will pay in a single year. After that, insurance covers everything. Here's where the math gets painful. The average family deductible for employer-sponsored health insurance now exceeds $3,600 per year. Before your insurance company pays $1, you are paying the first $3,600 out of your own pocket. Many people see a low monthly premium and assume they are covered, but low premiums often mean high deductibles. That trade-off transfers more financial risk back to you. And this brings us back to those bankruptcy statistics. The people who went bankrupt had insurance, but their out-of-pocket maximums weren't enough to protect them from a serious diagnosis. Cancer treatment can cost $300,000 or more per year. A major hospitalization can hit 6 figures before you leave the intensive care unit. If a catastrophic event can still bankrupt you after insurance pays its share, you are underinsured. So what do? Start with an insurance audit. Pull out every policy you have: health, auto, life, homeowners, or renters, and answer 3 questions. What is the maximum I could lose in a catastrophic event? What does my policy actually pay if that happens? And is the gap between those numbers something I could survive financially? Most people have never done this exercise. It takes less than an hour. It can completely change your approach to coverage. Once you know your gaps, here is the priority order. Make sure your health insurance out-of-pocket maximum is genuinely survivable. Get term life insurance equal to 10 times your income if people depend on you. Upgrade your auto liability to at least a 100/300 policy. And consider an umbrella policy. $1 million of additional liability coverage typically costs under $200 per year. It is the best insurance value most people never buy. Insurance is designed to be confusing because confusion sells more of it. But now you know the math, the traps, and how to make smarter decisions for your family. If this helped you, subscribe to Insure Smart. Every week we go deep on the insurance topics that actually matter. The free coverage audit worksheet is in the description below. Your financial protection starts today.